Ladies and gentlemen, welcome to the H2 and FY25 earning conference call of Vaidya Sane Ayurved Laboratories Limited. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. This conference call may contain certain forward-looking statements about the company, which are based on beliefs, opinion, and expectations of the company as of the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I would now like to hand the conference over to Dr. Rohit Madhav Sane, Chairman and Managing Director from Vaidya Sane Ayurved Laboratories Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to Vaidya Sane Ayurved Laboratories earning call for the financial year ended March 31st, 2025. I would like to begin by expressing my gratitude to all of you for taking up the time to join us today. I have with me on call today Dr. Bipin Ghag, the whole-time director of Vaidya Sane Ayurved Laboratories Limited. We have Mr. Narendra Pawar, our Chief Financial Officer. We have Mr. Kishore Kansi, our National Sales Head, and Dr. Praveen Gadigaonkar, our Head of Medical Operations. And the Ad Factors PR team, our Investor Relations team. We have shared our results along with the updated presentation. I hope all of you must have received it. We appreciate your interest in our company, and we are excited to share our business updates as well as the financial performance and the strategic outlook. So a bit about talking about Vaidya Sane Laboratories. Vaidya Sane Ayurved Laboratories operates under the well-recognized brand name of Madhav Bagh, a pioneering healthcare institution that seamlessly integrates the principles of traditional Ayurvedic medicine with modern diagnostic methodologies. We established ourselves in the year 2006, and since then Madhav Bagh has over a decade of specialized expertise in the reversal of chronic lifestyle diseases, including diabetes, hypertension, heart disease, obesity, and conditions related to pre- and post-angioplasty or bypass surgery. Our unique treatment model focuses on non-invasive, multidisciplinary, and holistic therapies, combining Ayurvedic practices with lifestyle modifications to effectively address non-communicable chronic disorders. With a mission to reduce mortality and morbidity associated with cardiovascular and lifestyle diseases, Madhav Bagh has emerged as a trusted name in the Ayurvedic cardiac rehabilitation and preventive care. As on March 31st, 2025, the company operates about 333 clinics all across Jammu, Kashmir, Punjab, Haryana, Uttarakhand, Delhi, NCR, Uttar Pradesh, Madhya Pradesh, Rajasthan, Maharashtra, Gujarat, West Bengal, Orissa, Goa, Karnataka, and Chhattisgarh. So out of these, 21 are company clinics, which along with that 54 are OPDs and mini clinics, and 266 are franchise clinics. We also operate 4 cardiac prevention and rehabilitation hospitals in Khopoli, Nagpur, Visakhapatnam, and Baroda, Gujarat, supported by a team of more than 450 Ayurvedic doctors. We empaneled with more than about 5 PPAs and 5 insurance companies to offer cashless facility at our Khopoli hospital, and now we have started the same at our Nagpur hospital also. We remain one of the few Ayurvedic institutions in all over India with NABH accredited facilities, including our flagship Khopoli hospital, as well as our Nagpur Kondali Hospital, which both of them continue to be a benchmark in the heart disease reversal process. I am excited to share with you all several significant achievements and developments from the past half year that demonstrate our continuous growth, innovation, and commitment to providing effective healthcare solutions. We are pleased to announce that the onboarding of Mr. Sonu Sood as our brand ambassador, with the campaign rollouts beginning April of the first week of this April. This move has already begun enhancing our visibility and strengthening the Madhavbag brand. Our marketing strategy has shifted from digital-only channels to ground-level outreach and direct engagement, which is yielding us stronger returns. This half year has been a period of execution and expansion. Our monthly new patient footfall has increased to about 9 to 10,000 per month, and we are now targeting somewhere more than about 12 to 13,000 new patients per month in the near future. This growth is a testament to both the trust patients place in us and the growing relevance of Ayurvedic treatment for lifestyle disorders. We also aggressively expanding our hospital network. Our new 30-bedded Vadodara hospital has become operational in the month of April and is scalable to about 100 beds. Maybe in the next 12 to 15 months, we should be able to do that. About in next 2 to 3 years, we aim to add more. We have planned for more than about 1,000 beds, and the next about 2 to 3 new 30-bed facilities have been planned in the coming financial year itself. On the clinic front, we have our asset-light franchise model, which continues to deliver scale and profitability. Out of these clinics, 333 clinics, 266 are franchise clinics, while 21 are company-owned clinics. These clinics contribute to around about 86% of the revenue, and the hospitals contribute to about 14% of the total revenue. As a part of our growth strategy, we are now empaneled with about 5 to 6 leading insurance companies and about more than 14 odd TPAs, including the Star Health Insurance, and are in discussion with several other TPAs as well as insurance companies. Our Khopoli Hospital's cashless facility, along with the newly started Kondali Nagpur also cashless facility, and the pending inclusion of CGHS scheme of both these hospitals, because both these hospitals are now full NABH approved, and both of them are now supposed to get with the CGHS scheme. That will significantly broaden our accessibility, and especially for the government employees. We have also begun the corporate partnerships, fulfilling the checkup orders for about more than 80,000 police personnel and equal number of Konkan Railway employees, and initiated tie-ups with large entities like JSW and Reliance. We continue to differentiate ourselves through our clinical outcomes. Our annual care plan enrollments have grown to about 2,700 to 3,000 care plans per month, and we proudly maintain a disease reversal rate of more than 80 to 85% for our key diseases that we treat. Our proprietary Panchakarma therapies and sustained patient follow-up models ensure long-term health improvement, not just symptomatic relief. Looking ahead, our strategic focus mainly remains on expanding our clinic network as well as the hospital infrastructure, with a sharp emphasis on profitability and improved patient outcomes. We aim to capitalize on our deep-rooted Ayurvedic expertise to meet the rising demand for alternative and preventive health solutions. Strengthening partnerships with insurance providers and corporate organizations will be the key to enhancing hospital occupancy and building stable long-term revenue streams. While scaling our operations across geographies, we remain firmly committed to our core mission, that is reversing diseases at their root not merely managing symptoms. By 2030, we aim to establish about 1,000 clinics, as well as more than 1,000 beds, and about equal facility to provide outpatient support to the patients coming to the hospitals, particularly focusing majorly in the tier 1 as well as 2 cities throughout India. Additionally, through our Institute of Preventive Cardiology, we are committed to train more than 10,000 physicians who will be contributing to our growing network and help us continue to lead the field of preventive healthcare. So now coming to our financial performance, the half year H2 FY25 revenue from operations for the H2 FY25 is about 48.05 crore as against rupees 48.23 crore in H2 FY24. Year on year, there is a decrease of 0.38%. The EBITDA, excluding other income, the EBITDA is rupees 7.74 crore in H2 FY25 as against 1.82 crores in H2 FY24. So there's an increase of 325% due to effectively rationalized key operating costs, notably raw material expenses, well controlled, and a fairly controlled employee cost, which has declined by about 21% odd year on year. Profit after tax was rupees 5.79 crore in H2 FY25 as against 0.81 crore in H2 FY24. So now the basic EPS stands to about 3.17 in H2 FY25. The full year about FY25, revenue from the operations in FY25 is about 89.85 crores as against to 99 crores in FY24. Year-on-year decrease of 9%, 9.5% on account of reduction in total footfall inside the clinics by 6%, and the new patient footfall reduction by about 19%. While the EBITDA, excluding other income, has been rupees 13.50 crore in FY25 as against only 4.5 crore in FY24. Increase of about 199%, driven by better cost control, especially in the employee and raw material expenses, along with an improved product mix and operational efficiencies. This helped the company to achieve higher profitability despite a slight dip in the revenue. Profit after the tax was rupees about 7.15 crore in FY25 as against 1.99 crore in FY24. So the basic EPS stood at about 6.76 in the financial year 25. We are confident in our strategy, our people, and our purpose, and we believe the coming periods will continue to reflect the strength of our model and the trust our patients place in us. Thank you once again for your time and continued support. We are now happy to take further questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Rohit from Mittal Analytics. Please go ahead.
Yeah, hi. Thank you for the opportunity. Am I audible?
Yes, Rohit. You are audible.
Sir, my first question is, I noticed that employee cost has come down from 25 crores to 18 crores. So, yes. Please help us understand the rationale behind this decline and how should we look at the employee cost going forward?
Okay. Just to give you an idea, about 25 crore to 18 crore, this was a very calculated move and a very strategical move that we had taken. and I had invested about 12 months odd to reach to this level. And this has been planned very well about what departments would do what kind of task. The KRA and KPLs have been put down on the paper very stringently and has been followed to a very good level. So in short, I would rather say that this is a very good optimization of employee costs that we have done. And I'm actually proud about it because this is what the real thing would be. And this, I don't think so going ahead. Much more higher employee costs would be the case. So in the coming years also, I will always try to keep this employee cost very much optimized. And to go ahead, say, about 18 crore is what you could see in this year, and we have still optimized it to a certain level in the last 2-3 months. But I would again have much more newer people coming inside the team. So it would again stay towards 18 crore itself in the coming year also.
Okay, thank you, sir. And sir, next question would be on the other expenses also saw significant decline, like from 41 crores to 34 crores. So what are the key factors that led to this drop?
Okay. I will ask our CFO, Mr. Narendra, to explain this cost, whatever he has optimized. So over to Mr. Narendra sir, आप बता सकते हो. Just a minute. He's on.
Hello.
Yes.
In other expenses, we have optimized the cost by reducing major expenses like advertisement, professional fees, and transport cost, then traveling and conveyance, then telephone expenses. Rent we have also reduced to some extent. Hello.
Okay, sir. Sir, the last question would be, if we see our intangible assets, so it has also increased drastically from 2 crores to 7 crores, under which 4 crore was allotted to brand Madhova. So can you please help us understand the rationale and basis for this valuation?
Yes. I will try to explain it. As I just explained you a few minutes back, that Mr. Sonu Sood has been given that post of being a brand ambassador for Madhavbhag. So we have tried to invest a lot on creating all those advertising materials for him and the content related to that, like the podcast as well as the all collaterals that we'll need to use it for the whole year. So that is how it has resulted into that kind of expense. And I'm sure that in the coming year, we'll be able to utilize that to a very good extent.
Okay. Thank you, sir. I'll join the queue for the next question. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Keshav Harlaka from BHS Securities Private Limited. Please go ahead.
Hi. Thank you so much for giving me an opportunity to ask my question. So,
yes.
Dr. I would want to know that our profit has gone up dramatically because of the benefits getting reduced from 25 crores. Am I audible?
So your voice is breaking.
Your voice
so
is
our profits have gone up to 7 crores from 1 crore odd because of the employee expenses being rationalized from 25 crores to 18 crores. The cost of goods sold has also come down. Earlier the cost was 26%. Now the cost of goods has come down to 18.70%, which has also led to a significant jump in profitability. So I would want your comments on this cost of goods sold, how you got it down so dramatically. Secondly, I would want your comment on main board migration. So we can migrate to main board because we have completed 3 years in SME board. So are we having any plans of going to main board? And can you give your comments? And can you also give us your view and what measures you are taking to increase top line of the company which has gone down by 10 crores.
Okay.
That's all
so
from my
what I'll do is, yes, I'll answer these questions into two parts. The first part will be answered by our CFO, Mr. Narendra. So I'll hand over the answering system to him. So he will answer the first part of the question. Go ahead, Narendra.
Our purchase cost is reduced because in consolidation it is वो रॉ मटेरियल कॉस्ट ही दिख रहा है, मतलब मैन्युफैक्चरिंग यूनिट जो डायनामिक एंड यूवी का परचेज किया हुआ है, कंसोलिडेशन में वो जो इंटर कंपनी ट्रांजैक्शन निकल गए, तो जो मटेरियल हमने डायनामिक एंड यूवी के लिए मैन्युफैक्चरिंग रेट पे ये किया था, प्रोक्योर किया था, वही कॉस्ट है, तो उधर ड्रास्टिकली चेंज हो गया है. हेलो,
noted, duly noted, sir.
Yes. Okay. This is the main reason.
Okay. So going to the second part of your question, Keshav, we are also planning hard to upskill ourselves towards the main board, and in the coming few months we'll be planning accordingly and trying to go towards the main board.
Okay. And so I wanted to know what measures are you taking to improve the sales of the company, because from 99 crores we've gone down to 89 crores. So can you give your comments on that?
Yes. As I spoke few minutes back, earlier we used to have our new patient footfall towards about 6,000 to 7,000 new patients every month. But now since last about a couple of months, we have been somewhere about 8,000 to 9,000 new footfall every month. And in the coming months, whatever we have planned, I am sure that we will take the total new patient footfall towards about 12,000 to 13,000 new patients every month. So as we all are aware, we have an enrollment ratio of more than about 25 to 30%. And as we go ahead with this, increasing the number of new patient footfall, we should be able to hire we should be able to have more patients onboarded on our care plans, and that will obviously lead to increase in the total revenue inside the clinics. While when we speak about the hospitals also, we'll be coming up with additional beds in the Khopoli hospital as well as in the Nagpur hospital, as well as the Gujarat hospital is just began. So all these places where the activities, the on-ground activities, as well as the insurance empanelment, as well as the corporate tie-ups are going ahead, I am quite sure about the revenue to build up in the coming months.
Noted, sir. So I have one final question. So we've got 89 crores in terms of top line. So how much of the top line has
Sir, we cannot hear you.
Am I audible now?
Yes.
So we have 89 crores in top line and 7 odd crores in terms of profit. So can you give us a breakup of what has contributed? So we have three verticals. One is hospitals, one is clinics, and one is products. So what is the top line contribution from clinics, from hospitals and products, and likewise for profit? So can you give us some sense of that, sir?
Yes, I will ask our CFO Narendra to answer this question. Narendra, to you.
Hello. From hospital, 23.20 crores were revenue generated, and from franchisee product and services, it is 64 crores. Hello. Hello.
Yes, sir.
हाँ, 23.20 करोड़ हमने हॉस्पिटल का रेवेन्यू है और 64 करोड़ का क्लिनिक का रेवेन्यू है इन 87 करोड़ में.
And how much is products? Products is 2 crores?
नहीं, 64 crores in 64 crores. Product is both are product and services.
Okay. Got it. And hospitals is 23 crores?
Yes.
Okay. And can you tell us what is the profitability contribution from both these verticals, hospitals and clinics?
Contribution, 1 minute. 18% is from hospital and 10% is from product and services. Franchise.
Okay. Okay, got it. Okay. Thank you. Thank you so much. Thank you, sir.
Okay.
Thank you. Next question is from the line of Praful Rai from Arjav Partners. Please go ahead.
Yeah, Rohit, hi. Congrats for a decent set of numbers. I have just few questions. First is, the cost reduction looks like that's more permanent in nature. So do you foresee that the margins which you have achieved in the current year are more sustainable kind?
Yes. No doubt.
Now this is a steady state margin we are talking.
Yes.
Okay. Second question, you alluded to it that number of footfalls of patients is likely to grow from 9,000 to 12,000 odd. That will translate into a very similar kind of a growth in revenue, given the same conversion ratio?
Yes.
Third point is, have you increased the prices of your products by? I'm just trying to ascertain the revenue for next year. So have you increased the rates at our end starting this year, or we are continuing to keep the rates at the same level?
Not yet. We haven't increased the rates yet, but we plan to increase the rates in the coming few months. I'm just trying to assess and get some survey from the patients, and based on that, we'll take the call.
So can I safely assume, feel free answer or not answer, we will end up doing around 150 to 100 crore, 20 crore kind of a revenue next year?
Yes.
And lastly, will there be some kind of a operating leverage playing out because of the costs being, so you said like employee costs will stay more or less close to 18 odd crores. So you'll see some kind of a further expansion in margin? Can we assume anything like that?
Yes, sure.
What's the kind of number?
Number would be somewhere about, it should be on a consolidated manner, it should somewhere reach about 16% or so.
For the full year?
For the full year.
Okay. And the PAT would be around 11 to 12% with that number? Okay. I think, thanks a lot, Rohit. This is helpful. Thanks.
Thank you.
Thank you. Next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir?
Yes, you are.
Yeah. Thank you very much, sir, for this opportunity. So just first I wanted to know, what's our currently monthly revenue we are doing right now? In the month of March or April, whatever. Yeah.
Yes. So as of now, when we talk about the first 3 months, which are always slow because of all these, in the last year where we were about crore odd in the first 3 months, we are about 7 crore in the first 2 months.
Okay. So March was higher, right? Is there any seasonality?
Yes. Sorry?
So what sort of seasonality we see? Generally the fourth quarter is the best, or is there any seasonality as such?
Yes, absolutely. The fourth quarter is always the best.
Okay. Why is that
first
so?
Quarter is
our kind of business.
There are several reasons. Like what happens is, post Diwali, people always like to invest more into health. Maybe for the new year, maybe for the Diwali, or maybe the season helps them out. Because in these first quarter, people usually go out for their tourings and native places. So obviously, all over the places, the total footfall is usually down as compared to any other quarter. That is the first reason. In the second quarter, usually we have of picking up total footfall as well as the revenue. In the middle about Ganpat, those festivals do create certain kind of hurdles. But post Diwali, the highway is very clear, and things become much more easier for us.
Okay. So generally fourth quarter is the best, and first quarter is generally the weakest quarter. Is that right?
Yes, absolutely.
Okay. And how do you see this monthly revenue scaling up? If I have to see, based on whatever 115 to 120 crores revenue we are looking at. So if April you said we did about 7 crores per month, right? That's what you said? So how do you see, I mean, by year end, what sort of run rate we might want to achieve? I mean, by March 26, let's say?
I am looking at somewhere about 20% of growth every month on month in the total revenue.
No. So I did not understand. So 20% growth month on month in the sense this 7 crores will become 20% higher?
No. The last year, YOY, yes.
Okay. And what was March 15th revenue? It was 9.5 crores, somewhat in that range?
8.5.
8.5 crores. So you expect March 26 to be 20% higher versus March 25 number?
Yes.
Okay. So ideally, won't the leverage be much higher? I mean, given that your revenue scale would be higher and having our gross margin in the range of 83-84%, maybe 80-81%. So ideally, your leverage advantage, won't the margins be much higher than what you are indicating, 16%, or because of this new onboarding of brand ambassador and all, so your cost will increase. So that's how you are targeting 16% margin. So some thought process would help. Yeah.
You are absolutely right. The margins would be much higher, no doubt about it. I am trying to be conservative right now. As I go ahead, you will see the changes happening and the margins growing.
Okay. I got. And what sort of new clinic and new clinic target for this year, FY26?
We will have 30 more additional new clinics in this coming year. So I would ask our national sales head to answer this question. So over to you, Kishore.
Hi. So we have been planning the GTM for almost 30 plus centers across few geographies, which includes Gujarat, Madhya Pradesh, Karnataka, and also in Maharashtra there are a lot of areas where we wanted to build up. 30 plus, and the GTM has been already planned.
Okay, fair enough. And what is currently number of beds we have right now as of FY25?
As on FY25, we have about 50 beds odd in Khopoli, 20 in Vizag, 20 in Nagpur Kondhali, and about 30 in Vadodara.
13 Vadodara. So total is about 120 beds.
120.
And what is the addition plan for this year?
So now we have got the permission for construction, all the permissions required for constructing 100 more extra beds in the Khopoli hospital premise itself. That is one. As well as the Nagpur hospital, we already have the permission sanctioned to 50% for more 80 beds. But we'll be constructing more, about 20 to 40 beds we'll start in this year. So that is the addition of extra beds inside the premise that we already have as of now. As well, in next about 8 to 9 months, as we take our own speed in the Gujarat Vadodara hospital, we'll be planning to have our 30 existing beds towards more 70 beds. So that would go somewhere towards about 90 to 100 beds in the Vadodara hospital.
So around 60-70 more bed in Baroda as well. So
Vadodara,
total, I mean, 100 in Khopoli, 40-50 Nagpur, and 60-70 in Baroda. So total about 200 bed more addition we can target in FY26, right?
Yes, it would take somewhere about 12 months odd to have the construction up.
Correct. Fair enough. I think that's very helpful, sir. I mean, that would be it from my side. Thank you so much. All the very best.
Thank you. Sure.
Thank you. Next question is from the line of Rohit from Mittal Analytics. Please go ahead.
Yeah, thank you for the follow-up, sir. So there is an exceptional item related to bad debts, like return of against franchisee fee. So I wanted to understand why this should be written off.
Okay. So I will ask our CFO Narendra to answer this question. So over to Narendra.
Franchisee fees that 2020 to 23, some group of franchisees were approached to us for investment, and they were interested in running the business. तो उन्होंने मतलब प्रोसेस किया था, लेकिन now they are not interested in that SFO model. So it was मतलब amount that receivable that we have written off.
Okay, understood. Thank you, sir. Thank you.
Thank you. Next question is from the line of Chirag Shah from White Pine Investment Management Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. Rohit, I have a slightly broader question for you. First is, now after a long time you are looking to expand the number of beds in a reasonably fast manner as compared to your last 5-7 years. Okay, plus you are looking to have a higher footfalls, etc. My question is, what internal changes are you making in the team? How are you, so that your sales team, your operations team, your doctors team, etc. are on the same page with respect to the growth? That's question number one. And are you looking to hire any external consultant or somebody who can help you to brainstorm the entire thought process of the company? Because this is the first stepping stone. After this, you would like to further expand. Especially you are going out of Maharashtra in a reasonably big way over the next 5 years, I presume. And why this is pertinent is your peers have already hired ENY for last 12 months, 18 months, and have been working with them on similar thought process. So that's question one. I have 2-3 more questions. I will come back once you answer them.
So the first question that you asked was about internal changes that we plan to do. Whatever internal changes we had planned, we have already executed it. And now we have very typical people who will be looking at the growth for the turnover as well as the expansion that we have planned. So few more changes in the people that I'll be expecting should be joining in next few months. But that is going to be a process that will take about 3-4 months at least. So that is first. Second is going to be about the consultant. No, we are not looking out for any consultant as of now. Even though I am aware about this ENY which has been hired by the peer. But still, I don't think so. The consultant role has begun right now because we have a lot to do, which we have learned in the last 1.5-2 years. So those things are supposed to be implemented yet. So with this implementation, I am sure that a level of growth will be seen. And maybe after that, we will need those consultants because consultants will give us those kind of insights and we'll have to implement them. So for the implementation, we'll have to cover up the backlog for the last 2 years that we had. So first, I'd like to cover up that backlog, take my speed, and then if required, the consultants would come in action.
Very, very well answered. Thanks for this. But so just a follow-up is, how would you marry the old thought process in the organization and the new thought process or new blood that you are bringing in? So that is the question I was more referring, because in the expansion mode, this friction has to be managed very well.
Yes, you are right. But I am glad to tell you that whatever past was there, we have already cleaned that past to a very good extent. And whatever people now you see, these are new people. Obviously, there is going to be a bit of chemistry that has to develop between the new people and the old people. But I'm sure I'll be playing the role of the surfactant wherever required. And I'm sure about that chemistry building up within all those team members. And it's already happened now. So I don't think so there is going to be such a big challenge. But with the new people that I'll be getting in, that is going to be an additional challenge. But I'm sure that is not such a big task for me.
Second question was on this insurance thing. So if you can just again update, I just missed out the initial. So all the hospitals are full NABH approved as of now, so be it Vizag?
No.
Okay.
No. Vizag, we have applied for NABH. Next 3 months or the thing should be in streamline with Vizag. As well as for the Vadodara hospital, we are in the process of applying. Maybe in a week's time, we'll be paying the fees for NABH audit. So that is again going to get streamlined. While Khopoli Hospital as well as the Nagpur Hospital are full NABH now, and we are now open for CGHS as well as the other government agencies which can get tied up with the hospitals. So we have started applying. In case of Khopoli Hospital, the CGHS audit date has also been fixed, and they'll be coming for the visit. Post that, within few weeks, we should be getting the CGHS approval for Khopoli Hospital. The same process we are going to apply for the Nagpur Kundali Hospital. And once Vizag and Vadodara is with NABH, we will be opening up CGHS and other government agencies for those hospitals also.
And how many you said 5 cashless TPAs have been tied up for Khopoli and Nagpur, right?
Yes.
And how many insurance companies have been tied up for cashless?
It's about 15 TPAs and 5 insurance companies. But
15 TPAs and 5 insurance companies. Okay.
Yes. And we have good able people now inside the team who have been working on the whole point of having these kind of insurance tie-ups with these TPAs as well as the insurance companies. And in the coming 12 months, I'm sure that we should be having the highest number of TPA and insurance companies tied up. Because the kind of people new have taken, they are quite able to do that.
Ideally, what is the right number of insurance companies we would aspire to have? 12, 15, 16? What is the right number
Minimum 10 to 12.
You will, and so we can assume that in next 12 months to 18 months, a large part of this would be covered?
Yes. That is the target that we have kept for ourselves.
And the impact of the 5 insurance companies that we have tied up is already being seen in Khopoli over last
Yes.
So if you can highlight, say, 12 months before, what was the cashless revenue contribution and what is today? Or in last 3 months, if you can just indicate broadly, it would be helpful.
Yes. So since the Khopoli Hospital has been tied up with the insurance companies, about 30% of the admissions belong to the insured patients itself. So rest of those patients are cash-paying patients, but 30% of the whole admissions happen through insurance companies.
Okay. And ideally, this number should be what, 60%?
To be very honest, what happens is, even though you go for allopathic hospitals view, in their case it's about 50 to 60%, because obviously the coverage matters. In this case, those people who have been insured with the insurance companies, they must have Ayush policy coverage in their insurance. But I'm sure in the coming days, gradually the things would change and everybody will have that Ayush coverage. And if that is so, then we will be able to match the allopathic standards of 60% insurance coverage. But according to me, right now we have more number of cash-paying patients. So that is also a good point. Insurance, obviously, yes, that's a good point. But in the coming future, I am sure that these things will change. As well as when the CGHS and the other government agencies come in, that is going to be an additional benefit for the hospitals.
This is helpful. And last question, if I may can just squeeze in. Update on GIPSA.
We have already applied for GIPSA. And they have already planned for the audit and things have already gone ahead. I think so within a couple of months max, we should be able to crack the whole thing. And we should be GIPSA approved.
And okay, thanks. Just one more thing. Sorry for this. If you can just update about what internal control process changes also you are looking to implement with because if you are focusing on growth without adequate internal controls or processes, so what changes have you made or what are you looking to implement? It would be helpful if you can highlight.
So, yes. Majorly, these internal controls were supposed to be at 3 to 4 major sites. One was with the manufacturing and the quality of the product, so as well as the purchase of these raw materials, so that the cost gets in control, as well as the quality stays wherever we were, as well as we can improve that. So those processes and the SOPs are already in place. Now the implementation process is going on for the same. And the quality of products will still improve, which will increase the patient compliance and thus the sale also. So that is one. Second is going to be about the HR processes, where the internal controls were important, as well as the traveling reimbursement and all those things. So things are already in place, and we have already started implementing those things, wherein you could see the change from 24 crore to 18 crore, you could see that. Because of the KRA, KPIs that have been already built for each and every individual, every person knows that what am I supposed to achieve in what amount of time. So things are very clear as we go ahead. So that is the second, where the HR processes were supposed to be in control. And the third is the medical processes. Whatever improvement we give to the patients, if those improvements keep on improving, as well as we keep ourselves stable to the amount of improvement that we give, word of mouth plays a very important role for the patient acquisition, which will again keep the cost under control, because if the word of mouth keeps on going ahead, we will not have to spend a lot amount of money on marketing to get those new patients inside.
Okay, great. This is helpful. I'll come back for more. Thank you.
Thank you.
Thank you. Next question is from the line of Ankur Agarwal from Motozak LLP. Please go ahead.
Hello.
Yes, Ankur.
Hi, sir. I wanted to know the care plan that you said. So is it for heart disease only, or is it for something else also?
Okay. I will pass this question to our Head of Medical Operations, Dr. Praveen. He will answer this. Over to Praveen.
Yes. Right now, we are starting with multiple care plans. जैसे अभी तक हम 4 डिसीज को फोकस करके केयर प्लान कर रहे थे, जिसमें हार्ट, डायबिटीज, हाई ब्लड प्रेशर, ओबेसिटी, थायराइड, ये मेजर कंसर्न्स थे. अभी जो पेशेंट्स आ रहे हैं, उनके जो कंसर्न्स है, उनके पेन एरियाज है, उसके हिसाब से हमने और 9 to 10 केयर प्लान हमने डिजाइन किए और जो ऑलरेडी इम्प्लीमेंट होना शुरू हो चुका है, जिसमें कोलेस्ट्रॉल मैनेजमेंट है, जिसमें पीसीओडी मैनेजमेंट है, जिसमें गट डिटॉक्स है. ऐसे मल्टीपल केयर प्लान हमने एड ऑन किए हैं. मूविंग अहेड, कार्डियक पेशेंट्स में भी हम फर्दर सेग्रीगेशन कर रहे हैं, जिसमें लो ईएफ हो या फिर ब्लॉकेजेस हो या फिर पोस्ट प्लास्टी रिहैब हो. ऐसे और केयर प्लान हम कमिंग 1 to 2 months में लेके आ रहे हैं. तो ओवरऑल ये साल में कम से कम 10 से 15 न्यू केयर प्लान्स ऐड होंगे इन आवर बास्केट, सो दैट एवरी पेशेंट जो क्लिनिक में विजिट कर रहा है, हम उसके एक्सपेक्टेशन के हिसाब से उसको ट्रीटमेंट दे सके.
नाइस सर. और सर, जो केयर प्लान है, एक एवरेज कॉस्ट क्या आता है कस्टमर को केयर प्लान का?
यस, एवरेज कॉस्ट जो है, कॉस्ट जो डिफाइन किए हैं वो ईच एंड एवरी पेशेंट के हेल्थ कंडीशन के हिसाब से स्टार्टिंग फ्रॉम 7 to 10,000 टू ऑन एन एवरेज 40 to 60,000 के रेंज में ये केयर प्लान की कॉस्ट आती है. एंड इन कार्डियक केसेस दिस केयर प्लान कॉस्ट विल goes to 80 to 90,000.
This is for how many days, sir?
This is for each care plan having 2 sections. That is, first is the aggressive management. It will stand for near about 90 to 120 days. और उसके बाद हम पेशेंट को फॉलोअप में रखते हैं. तो each care plan is having validity of 365 days, that is 1 year.
Okay. सर, अपना जो लास्ट ईयर अभी जो कंक्लूड हुआ है, इसमें हमने टोटल कितने केयर प्लान्स बेचे होंगे, ऐसा कोई डेटा होगा? और हमारा एवरेज क्या रियलाइजेशन हुआ होगा पर केयर प्लान?
यस, केयर प्लान अगर हम लास्ट ईयर और लास्ट ईयर को कंपेयर करें तो नियर अबाउट 33,000 केयर प्लान बोथ ईयर्स हमने पेशेंट्स को दिए, पेशेंट एनरोल हुए ये केयर प्लान में, जिसमें देखा जाए तो डायबिटीज में बहुत अच्छा सर्ज है। कार्डियक केयर प्लान में भी बहुत अच्छी इम्प्रूवमेंट हमें दिखाई दी है। इसके साथ साथ जो नए केयर प्लान्स अभी हमने इंक्लूड किए इन लास्ट क्वार्टर ऑफ लास्ट फाइनेंशियल ईयर, जिसमें कोलेस्ट्रॉल मैनेजमेंट हो, गट डिटॉक्स हो, पीसीओडी हो, ये जो स्मॉल प्लान्स जो हमने ऐड किए हैं, इसमें भी बहुत अच्छा हमें इम्प्रूवमेंट और नंबर ऑफ केयर प्लान हमें बढ़े हुए दिखाई देते हैं।
और सर एक चीज और, जो फ्रेंचाइजेज हैं अपने या क्लिनिक्स हैं प्लस हमारे हॉस्पिटल्स हैं, तो जो केयर प्लान्स है ना उसमें आप कितना % हमारा फ्रेंचाइजेज क्लिनिक्स पे सेल होता है और कितना % केयर प्लान ये 33,000 में से हॉस्पिटल्स में सेल हुआ है डायरेक्टली?
ओके, कैन यू रिपीट योर क्वेश्चन अगेन?
हाँ सर, मैं जानना चाह रहा था कि ज्यादातर हमारी केयर प्लान की सेलिंग कहाँ पे हो रही है? हमारे लाइक क्लिनिक्स में हो रही है या फिर हॉस्पिटल्स में भी होती है?
ओके, हॉस्पिटल्स में ना वी हैव for 7 days. The patient stays with us for 7 days, and the next 3 months we keep the patient in follow-up, and then for the next 9 months we have the patient in a milder kind of follow-up. So hospitals में जो होता है, अगर आप खोपोली हॉस्पिटल के बारे में देखें तो there are about 220 to 260 patients getting enrolled every month. So on an average हम लोग अगर देखते हैं तो 3,000 patients खोपोली से डिस्चार्ज होते every year. While for Kondai hospitals, it goes to about 700 to 850 patients getting discharged every year. Vizag now we have reached to about 120 discharges ARR every year. Vadodara we have just started, so we had about 15 to 20 patients staying at a discounted rate over there, but that is just began. So that is how for the hospitals. While Dr. Praveen that mentioned you about 33,000 care plans, that was specifically for the clinics.
Okay, understood sir. सर एक बार छोटी सी चीज और पूछूंगा, जैसे हमने ना लास्ट ईयर जो अभी ईयर कंक्लूड हुआ है अभी भी 33,000 केयर प्लान बेचे और लास्ट ईयर भी हमने 33,000 केयर प्लान बेचे थे अप्रोक्सीमेटली। तो जो ये 10 करोड़ का रेवेन्यू डिफरेंस आया है ना, मतलब हमारा रेट तो आई थिंक सेम ही था दोनों साल केयर प्लान्स का, तो वो रेवेन्यू डिफरेंस किस चीज में आया? क्योंकि हम लोग फ्रेंचाइजीज को कट दे रहे हैं, पहले हमारा ज्यादातर क्लिनिक्स खुद का था, मतलब थोड़ा सर वो एक्सप्लेन करेंगे क्या बिजनेस मॉडल?
यस, सो राइट नाउ इफ यू सी दोनों साल में भी 33,000 हुआ है. द डिप हैज बीन इन few hundreds of care plan. The earlier year it was somewhere about 33,800, while this year we were somewhere 33,500. So 300 to 400 care plans dip वहाँ पे दिखाई पड़ा है. Along with that, some more dip has been seen in the medicine sale. The reason behind it is the total footfall, which was about 8.2 lakh for the whole year in the earlier year. This year we had been somewhere about quarter to 8 lakh total footfall, as well as the new patient footfall जो medicine sale होता है, the new patient footfall which was last year, which was somewhere about 1 lakh odd. This year we had only 82,000 or 85,000 of new patient footfall. So I would like to stress on this point that in spite of this 80 to 85,000 of new footfall in this year, we could sell equal number of care plans as what we sold in the last year. So going ahead, as the enrollment ratio is still improving with the doctors becoming more and more confident and being optimized towards having more patients with their disease reversal, I am sure that in this year when we target more than about 1 lakh of new patients footfall inside, the number of care plans would also increase.
Got it sir. सर तो मेजरली हमारा जो मेडिसिन रेवेन्यू है वो कम हुआ है क्योंकि थोड़ा फुटफॉल वहाँ पे कम था, है ना, फॉर मेडिसिन. और आई थिंक तो वो चीज इस वक्त इस इस ईयर में रिकवर हो जाएगी क्योंकि एनीवे वी आर प्लानिंग 30% मोर पेशेंट्स पर मंथ.
Yes.
Okay. Thank you so much, sir.
Thank you.
Thank you. Next question is from the line of Aman Goklani, an individual investor. Please go ahead.
Good afternoon, Dr. Sane.
Good afternoon.
Two, three questions. Number one, I believe last time when we spoke, you had suggested that the company focuses on long-term care plans, anything that lasts between 6 to 9 months, maybe a year. So with the addition of these other plans, your esteemed colleague was just speaking about, have we also now entered the short-term care plan market like our peer?
Yes. So what have we done is, these diseases, they are not so, I would say, they are not so deleterious for the body. They don't create any kind of organ damage as such. So smaller care plans like it would be insomnia, it would be PCOD, it could be GRD. So these care plans are for about 3 to 4 months duration. But the whole target that we usually keep with our doctors is to keep those patients in connection and keep them under follow-up, because these things should not recur. So whatever it is, the follow-up would stay for at least a year. And post 1 year, we usually have these Navjivan care plans, which are either 1 year more or 2 years of follow-up in a very, very discounted rate. So the patients keep on coming to us because of this. Hence, if at all, even though we have about 33,000 care plans being there with us in this whole year, we have a total footfall of about 7.5 lakhs of patient coming down to us every year as such. So that is how we are majorly concentrating on longer care plans itself. But yes, when these kind of patients come in, we also have started looking at these shorter care plans also.
And is this something your competitor also is doing? Is this something that you've added on as additional thing, so that does that increase your total addressable market?
Yes, it increases our total addressable market, no doubt about it. Because earlier we used to concentrate majorly on diabetes and heart disease only. But now, along with this, I'll be concentrating majorly on various different parts of heart diseases. Like earlier, we used to only treat those patients with existing heart disease. Now we are trying to brand ourselves with other formats of heart disease also, like post-angioplasty, post-bypass surgery, rehabilitation also majorly, as well as the prevention plan. And Dr. Praveen also mentioned about cholesterol management, lipid management, other care plans also will be considered. So overall, the cardiac addressable market also will become bigger for us. As well, we have also come up with the shorter care plans also.
Okay, understood. Super. So the next question is a little intertwined. So I believe last year we had a two-pronged agenda. One was cutting costs, which you guys have done a fabulous job on, so congratulations on that. The other was growing the revenue, which is where we faltered big time, and I think it's also to do with the marketing plan. You guys were focusing on, having something new started, etc., and now you've signed Sonu Sood as a brand ambassador. And you've also mentioned that you guys are looking at, changing how you look at marketing yourselves from, having a more ground up approach.
Yes.
So can you throw some light on, how this will work? How are you guys planning this? And second, can we start seeing some signs of this reflecting in the revenue starting the first half of this year? Can we expect 55 crores of revenue in this coming 6 months?
Surely we can. So if at all you compare the first half of this year, which has passed away, compared to the next half, we have obviously grown in the total revenue. But as what you said, the drop in the total revenue for the whole year was because of the first 2-3 months that we had lost. So that was the basic reason for it. But I'm sure now in the coming days, we will try to pick up with a good speed, and I should be able to deliver good results in the coming years also.
Okay, and what's changing exactly with the marketing plan? Can you just throw some light on it? And that's my last question.
Sure. So I'll speak about a minute or more, or maybe 2 minutes more on this point. So what have I understood is marketing majorly is about two different things. One is about creating brand and reaching with the type of awareness that we need in the masses. That is one. Once the people are aware, once the people are able to understand about the brand, then they will plan to come down to the clinics or hospitals. So whatever happens, even though they know the brand or even they don't know the brand, second most important thing is going to be conducting those kind of outreach activities. So branding and marketing is a different ball game, while having those activities and getting the footfall inside the clinic is a different ball game. So we are concentrating on both of these things simultaneously. So major concentration would be on getting patients inside the clinic through the call center. So now we have an additional thing that we have inbound as well as outbound call center. And slowly and gradually, we'll be also starting with tele support for the patients through the call center who are not able to come to the clinic. So we will be able to deliver medicines through the logistic support to those patients. So that also has begun. So last 2-3 months, we have started with the call center, and call center has started delivering good results. So the number of new patient footfall that we are looking out from the digital media, whatever marketing we'll be doing, the leads that we get, now the call center goes behind that, churning those leads and getting a good number of new patients inside the clinic. At the same time, we have those local activities that our team usually does with the clinics every week, and that also attracts a good number of footfall inside the clinics. So both these things together, I am sure that we should be able to achieve our target.
Okay, sounds good. So all the best and hope to see some solid results in H1. All right, thank you. Bye.
Bye.
Thank you. Participants, in order to ensure that the management is able to address questions from all participants in conference, please limit your question to only one question. Next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir, again for the opportunity. So just I have one small thing I just wanted to understand. Whenever you revenue scale up, because our operating leverage can be very high, so what could be our aspirational margins that we may look at a higher revenue scale? I mean, this year we said we are targeting 16%, but at a higher revenue scale, what is the EBITDA margin range maybe for FY27? What can be the EBITDA margin range we may look? Yeah.
Okay. I'll give you a broad understanding of it. If at all we talk about the hospitals have a EBITDA margin potential of about 50 to 60%. So as of now, as soon as if we talk about the Khopoli Hospital, the EBITDA margins are quite stronger. If we talk about the Kondhali Hospital, the Nagpur one, the EBITDA hospitals are a bit lesser than Khopoli, but yes, quite stronger as compared to the clinics. Now, when we talk about the Vizag Hospital, the EBITDA margins are slowly and gradually picking up, so that also will help. Vadodara is a newer one, hence it will take some amount of time. But in the hospital part, the EBITDA margins are very strong. Now, the challenge that I have taken up is improve the clinic EBITDA, the clinic business EBITDA, and I am sure about it, that will also grow up. So if you talk about this, I'll be looking somewhere about 20% EBITDA in the coming years. I am not sure whether I should be able to reach in the year 27 or not, but more than 20% is what I'm targeting as a whole EBITDA when we go ahead.
Sure. That is very helpful. I think that would be from my side. All the very best.
Thank you.
Thank you. Next question is from the line of Ankur Agarwal from Motozak LLP. Please go ahead.
Sir, one thing I would like to ask from a point of view of medical tourism. So, like, if you go to Max Hospital in Delhi, there are so many patients I see who are not Indians. And do you have any kind of plans where, you are providing some good kind of stay in medical treatments to this kind of clientele, foreign tourist, medical tourists?
Yes. Because yes, Ankur. Yes, I did get your question. Yes, we are looking out for it, no doubt about it. We have also been in connect with 2 agencies who usually have patients from various African countries. That is one agency. The second agency that we are in conversation with is an agency who majorly works on the GCC countries. So we have already started working on it. We have a team of couple of doctors who usually have started now consulting those patients online, and we are just exploring this association, if at all we can actually deal with them online, send them medicines as well as bring them to our Kopuli as well as Nagpur hospital for their stay with about 7 to 10 days. The care plans have already been created for that. I think in next couple of months or so, I should be able to speak very confidently on this issue.
Okay, thank you, sir. Thank you.
Thank you. Next question is from the line of Keshav Harlaka from BHH Securities Private Limited. Please go ahead. Mr. Keshav, you can go ahead with your question. As there are no further questions from the participant, I now hand the conference over to Dr. Rohit Madhav Sane, Chairman and Managing Director from Vaidya Sane Ayurved Laboratories Limited, for closing comments. Over to you, sir.
Okay. Thank you. I would like to thank you all for taking your time out and attending this call. I'm also thankful to each member of our Madhavbag family, as well as our clients, patients, banks, investors, financial institutions, and all other stakeholders. For any other queries or information, please get in touch with our investor relations team. Thank you. Thank you, everybody.
Thank you. On behalf of Vaidya Sane Ayurved Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.